Good morning, everyone. It's 20 past 10 UK time on Friday, 27th of March. And for a change, we've had several good, positive, upward trading days. And the front page of VectorVest UK looks much better for the bulls today than it did this day last week. So let's just look at the detail. First of all, for the last 3 days now, we are in a primary wave has turned up. The short-term trend of the London market has turned up. The underlying trend still down, and we're on a confirmed down call. Of note is that we've got a green light in the price column of the color guard, which tells us the price is up day over day and week over week. So the first two signals of the turn on VectorVest have occurred. Primary wave is up and we've got a green light. However, the advice advocates caution buying stocks at this time. So the first two signals of I think 6 market timing signals on VectorVest are saying buy. Only the most aggressive traders should be taking positions. More conservative traders that are following our worry-free plan would be sitting patiently and waiting for a confirmed up, and that's still a way away. So let's have a look at the market timing chart itself. Here we are. There's the market timing chart. This is the VectorVest composite of the UK, and as you can see, it's fallen off the side of a cliff over the last couple of weeks. That's our market timing indicator. Let me make it a color that you can see a little bit easier. And as you can see, the market timing indicator showing marked divergence prior to the fall. I'll put on the longest term signals, and that is the confirmed calls. And as you can see at the top of the market, this market was in fact going nowhere, and this was falling. Always a telltale sign. Now at the minute, we've got certainly no divergence here whatsoever. But the MTI is at a mega oversold situation, which is always good. If I put on the buy-sell ratio, we can see that again we've got this very marked divergence. The price was rising, but the indicator couldn't follow. And a little bit of worry, of course, is that over the last few days when the market has been rising strongly, the buy-sell ratio hasn't really budged at all. So the first two signals in VectorVest are saying yes, and if I were to go to a 3-month chart and put on the primary wave, you can see how the primary wave kicked in there. That's a signal for the most aggressive traders. I think that if you are a spread bettor, you've got no choice but to take signals like that. So now the wave count is far from being conclusive, but we could easily have many Elliott wave analysts are calling this wave 1, that's wave 2, this is wave 3. We're presently in a wave 4 and we've still got a wave 5 to come, and if that is the case, then wave 4 is invariably a 38% to a 40 to a 50% retracement of wave 3, and that's exactly what we got. And as you all probably know, the market is has opened up to 300 points below where we are. So I think that we can quite easily see a little bit of a pullback here, folks, even under the most positive circumstances. Now on another chart, I have a chart of the Dow futures, and this is from the low. It's an early chart off the low, and as you can see, this has charted 5 waves up and is now pulling back a little bit. Even under the most optimistic circumstances, after 5 clear waves up like this, then we should have probably 3 waves back, and that can quite easily take most of today, maybe most of Monday as well, to do that. So just expect a little bit of a pullback here before this market moves again, even under the most positive circumstances. If the Elliott wave people are correct and we need a retest of these lows, then anybody that got in early, my advice is to get your stop losses up to as close to entry as possible, and be very strong with those stop losses. Okay, so we're far from being out of the woods, but nevertheless much better than we were this time last week. Conservative traders should wait for at least the underlying trend to turn up, and those following our worry-free plan, which is our most conservative plan, should in fact wait until the front page of Vector Base prints a confirmed call, and we haven't had one of those since the middle of February. All right, so aggressive traders that already got into the market need to be very careful, because we could see a pullback here even under the most positive circumstances. Conservative investors should be sitting and watching and putting together, in my humble opinion, a watch list of high RS shares that are undervalued, shares that have pulled back very strongly in this particular sell-off, that have got outstanding fundamentals that can take advantage of any upside. And Avon Rubber's had a wonderful couple of days. Lion Trust has done well, JD Sports has done well, Halma has done well. So you don't have to look that far to find those shares in both the UK and in the US that have outstanding balance sheets. You don't need to do much more than to resort by RS. Thanks very much. Bye bye.